Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 3rd April 2024. Active hiring from top IT services companies recorded their first rise in the past 20 months, with the total number of open positions accepting applications rising to 82,000 in March from a low of 50,000 in January this year, data from LinkedIn and other top job boards showed. Dixon Technologies, India's largest electronics contract manufacturer, is in initial talks to buy a majority stake in the local phone making unit of China's Transsion Holdings. Transition's India business is valued at about Rs 700 crore. The talks come amid greater scrutiny of Chinese firms operating in the handset ecosystem. The center wants Indian companies and executives to have more sway over the country's mobile phone industry, currently dominated by Chinese handset brands, as part of an informal mandate. India incorporated 16.3% more companies and 62.7% more limited liability partnerships in financial year 24 than a year before, showed the data released by the Ministry of Corporate Affairs, reflecting growing optimism about the country's growth prospects over the medium to long term despite external headwinds. A record 1,85,314 companies were incorporated in financial 24 against 1,59,339 a year before. Similarly, the number of LLPs that were registered last fiscal touched an all-time high of 58,990 compared with 36,249 a year earlier. Steps to ease compliance burden and promote ease of doing business are also driving the record incorporation. In order to provide clarity on the misleading information related to the new tax regime, a press release was released by the Ministry of Finance. It is clarified that the new regime under Section 115 BAC subsection 1A was introduced in the Finance Act 2023 and no new change has come in since 1st April 2024. This regime applies to persons other than companies and firms as a default regime from the financial year 23-24. Under the new tax regime, the tax rates are significantly lower. However, the benefit of various exemptions and deductions is not available as in the old regime. Although the new tax regime is the default tax regime, taxpayers can choose the tax regime they think benefits them. The option for opting out from the new tax regime is available till the filing of the return for the assessment year 24-25. Eligible persons without any business income will have the option to choose the regime for each financial year. Therefore, taxpayers can choose a new tax regime in one financial year and an old one in another year and vice versa. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.